Hello, and welcome back to Data Dispatch, the channel where we talk about the latest trends in the news in the world of artificial intelligence and also AI stocks. Today, we're going to be discussing the C3.ai stock and why it fell today after the company reported its earnings outlook for the next quarter that missed analysis estimates. Now, I'll also look and explain what C3.ai does and where experts predict its value in the future. So stay tuned, and of course, don't forget to like and subscribe for the algorithm. Now, C3.ai is a leading enterprise software company that offers artificial intelligence solutions to help organizations optimize their operations and improve decision making. This company was actually founded a decent amount of time ago in 2009, but it didn't become public until December of 2022 at $42 per share, raising $651 million off its IPO, its initial public offering. However, the stock soared to a high of $183 in February of this year, making it one of the most successful IPOs of 2022. However, since then, the stock has been on a downward trend, losing more than 80% of its value as of today. So what happened is the big question. Well, there are several factors that contributed to the decline of C3.ai. One of them is the increasing competition in the AI market from other players. We've seen news from Google, Microsoft, Amazon, IBM, and Salesforce, and these companies have also more resources, scalability, and a customer base than C3.ai itself, and they can offer similar or better AI solutions at lower prices, or even better, for free. Now, another factor is the high valuation of C3.ai stock. Even after the recent drop, C3.ai still trades at a price to sales ratio of about 30, which means it is much higher than the industry average of about 10. This means that investors are paying a premium for C3.ai's growth potential, but also expecting high returns on their investment. However, C3.ai has not been able to deliver on those expectations thus far. In fact, the news that we have today, C3.ai reported its earnings results for the fourth quarter of fiscal of 2023. The company posted revenue of $52.4 million, which was up 26% year over year, but unfortunately below an analyst consensus of $54.1 million. Now, the company also reported a net loss of $18.8 million, or basically 17 cents per share, which was the worst than analyst expectations of a loss of 15 cents per share. But the most disappointing part of the earnings report was actually the guidance for the next quarter. C3.ai said that it expects revenue of $50 million to $52 million for the first quarter of the fiscal year of 2024, which would represent a decline of 4 to 8% year over year and miss analysis forecast of $58.5 million. The company also said that it expects a net loss of 19 to 21 cents per share for the next quarter, which would be less than analysis projection of a loss of 16 cents per share. Now, the company blamed the weak guidance on several factors, such as the ongoing impact of the pandemic on its customers' spending patterns, the seasonality of its business cycle, and the difficulty predicting large enterprise deals that have a long sales cycle. The market did react negatively to this news and sent C3.ai stock down more than 11% today as of this recording. The stock closed at 40.01 per share today and is trading at 34.14 after hours. So really, what does this mean for C3.ai's future? Well, some analysts are still bullish on C3.ai's long-term prospects and believe that the company has a unique and differentiated AI platform that can create value for its customers across various industries and use cases. They also think that C3.ai has a strong leadership team led by a loyal customer base that includes some of the largest and most reputable organizations in the world, such as Shell, Bank of America, and the U.S. Air Force. However, other analysts are also cautious and skeptical about C3.ai's growth potential and competitive advantage. They argue that C3.ai faces significant challenges in scaling its business model, expanding its market share, diversifying its revenue, and improving its profitability margins. In that justifying its valuation, they also point out that C3.ai has a history of missing earning estimates and lowering guidance in previous quarters. Now, according to MarketBeat, C3.com, out of 13 analysts who cover the C3.ai stock, 6 have a buy rating and 6 have a hold rating, and 1 has a sell rating. The average price target is at 19.70 per share as of today, which implies a downside potential of more than 50% from today's closing price. Well, so should you buy or sell C3.ai stock? That really depends on your risk appetite. Of course, I'm not a financial advisor, so take everything I say with a grain of salt. Also, what's your time horizon and your investment goals? If you are looking for a high growth AI stock with huge upside potential, but also high volatility and uncertainty, then possibly maybe C3.ai could be something you could consider as a speculative bet. However, if you're looking for a more stable and reliable AI stock with lower risk but also lower reward, you might want to look at some of the other options. That's really all for today's video on C3.ai stock. I hope you found it informative and helpful. If you did, please give it a thumbs up and share it with your friends. And if you have any questions or comments about C3.ai or any of the other AI stocks that you want me to cover in the future videos, please let me know down in the comment section. Thank you for watching, and I'll see you guys next time.